G. Shivakumar, who's the CFO of GE Shipping. And it's an absolute delight, Mr. Shivakumar, to talk to you at the start of the new calendar. This is Neeraj here. Good morning. Just wondering, this first geopolitical gambit that has happened in the Latin American continent and the possibilities of some more that are being spoken about, does this in any fashion impact conversations around freight rates, routes, etc.?
Morning, Neeraj. Thank you for having me, and a very happy new year to you and your team. It's a little early to tell on Venezuela in particular. What we haven't done that trade for a long time because it's a sanctioned trade and typically done by what is called the shadow fleet or the dark fleet. So the one thing is that if that trade becomes legal again, which is that it's no longer sanctioned, and there are more exports coming out of Venezuela, which will happen over a period of time. This is not a short-term thing. Which is available to the legal, non-sanctioned, non-dark fleet like us, then it's good for that part of the market. So broadly, on the trade front, over a period of time, they should tend to be positive because that was a trade which we were not doing and most of the large players were not doing.
I want to follow up on that, Mr. Shivakumar, because the expectation is, and very good morning to you and Happy New Year as well. This is Alex. I'm just wondering about how your utilization might shift because you're running 39 vessels. And if you are to undertake this trade, the question is, do you expect a dramatic shift in that, considering that it only accounts for about 1% of global supply? That is unlikely to change dramatically in the near term. But over the medium term, do you think that that will shift? And would you build up additional capacity to take care of this, or would you shift incrementally from your existing capacity?
Morning, Alex. It's not so much a question of our participation in the trade. So typically what happens with the shadow fleet or the dark fleet, as I mentioned, which does these sanctioned trades, typically they tend to be older ships, which would not be normally trading in the general market, okay, competing in the general market. If that trade is no longer a sanctioned trade and it is a legal trade, then if everybody can compete and we can compete with our, say, 10-year-old ship, then the 23-year-old ship, which is currently doing that trade, will not be able to compete because the customer, the oil company, will tend to prefer a more modern and a safer ship. And that's why the market for the modern or safer ships expands, while the old ships have to move out of that trade. And that's the kind of effect that it can have. It's not going to affect our investment decisions because we are not necessarily looking to participate in that trade ourselves. What all we're saying is that's another trade that opens up for our type of ships. It'll add to tonnage when the oil comes back. You're right that it's not something that's going to happen in the near term. First of all, the oil has to increase. So currently production is around 1 million barrels a day. A decade ago, it was more than 2 million barrels a day. 2 decades ago, it was 3 million barrels a day. So if that comes back and if it is long haul oil transport, again, it's good for the tanker business. But again, this is very, very, very long term because you have to now restart the entire production process.
Got it.
So these are all pretty long shots.
Okay. You mentioned that this is not going to dramatically shift your investment objectives. And I spoke about 39 vessels. Please correct me if I'm wrong. But you're at 100% capacity utilization. I'm just wondering what the objective is in terms of capacity building there and what the opportunities are.
Perfect. So recently, and we've been doing a lot of sales and sales. If you've seen our press releases, you'll see that we've sold some ships, we bought some ships. What we're doing currently, because the prices are high, is we've just been doing some modernization. So we sell the old vessels and we buy some new vessels to replace them. New meaning that we buy, say, a 5 to 10-year-old ship to replace almost 20-year-old ship that we are selling. That's what we've been doing. We don't want to put too much incremental capital into the market at today's prices, because we are a counter-cyclical player. We like to keep our money for investment when the down cycle is on, because that's when you make the most returns. So we've been just doing modernization. We've been hanging around this 39-40 ships for the last couple of years. So that's what we've been doing. Having said that, it's still in the last 5 months, we've committed 1,200 crores approximately of additional capital, because obviously a newer ship costs more than the old ship that we are selling. The total amount that we can invest is in excess of 10,000 crores today. But so we're committing a small part of our capital. We are keeping the bulk of our capital for investment when we think the prices are right. So we are in a wait and watch mode because of where the prices are. We're not going to be doing too much capacity expansion till we think the prices are right for us.
So a quick last view on the trends that you're seeing in the freight rates as things stand right now. And directionally, do you anticipate that your margins will hover around that 55, 56 mark, which you've pretty much been maintaining?
We can't give a forecast,
Sure.
simply because we don't know. The market is very volatile, and you see the kind of events that are happening every week. And because we have 80% of our capacity exposed to the spot market, which means that the volatility in the results and the earnings is extremely high. Markets are somewhat better than the previous year. The crude tankers in the last 3 months have done significantly better than they were doing in the same period in 2024, that's October to December. Even now, they are a bit better than they were a year ago. Product tankers also a little bit better. So for crude tankers, maybe $10,000 a day more, higher than they were last year. For product tankers, maybe $3,000 to $5,000 higher than they were last year. Bulk carriers, the smaller vessels are slightly better. The large vessels, which is the Cape-size bulk carriers, maybe again $5,000+ better than they were at the same time last year. So in general, it's slightly better in terms of realizations or day rates, and that's what we are seeing currently. It's tough to forecast what could happen to these. In general, because there's so much oil on the water, it seems to be reasonably positive.
Mr. Shivakumar, thanks so much for taking the time this morning and for speaking to us. Absolute pleasure as always.
Thank you, Alex.